Hey guys, today we're going to do a mock in-home presentation. This is a follow-up to the training on the financial inventory, the client worksheet. I'm just going to run through a hypothetical situation on how I would present the sheet in order with Elena and Harold. Before I get into the worksheet, what I'll do is I'll take the lead sheet out and I will actually turn it and I'm going to start moving from here. So Harold and Elena, I just wanted to show you, this is the actual form that you guys filled out. So you can see your signature here. I've got your dates of birth. Probably looks familiar. I'm assuming you guys have gotten like 6 or 7 other forms like this in a different similar format. Am I right? Or
She handles all the mail. So.
Gotcha.
Yeah.
Lots of them, right? You do not need to fill out every form. Okay. If you filled out a few, that's okay. They're going to come back my way. I do manage the local area. We handle mortgage protection for about 15 different companies. So we've got really everything there is as it pertains to the life portfolio, final expense. We do retirement preservation. We do a lot of different things. But today we're going to talk about the mortgage protection. Most of the time when I'm getting these forms back, it's pretty straightforward. There's usually a concern if something were to happen to one or both, that we want to make sure that the mortgage is taken care of, usually first and foremost in death, sometimes a disability. Can you tell me a little bit about that for you guys? What's most important?
You filled out the form.
You told me to, so.
Well, I guess, I don't know, if I die, I want Elena and the kids to be taken care of.
Okay, so pretty straightforward. So is there more concern for you, Harold, being the primary earner, or do you have some concern if something were to happen to Elena? Is she taking care of the kids? How does that break down?
Well, I think to start with, for me, primarily on me, but I'd like to look at something for her as well if we can afford it.
Okay, sounds great. So I'm going to ask you guys a couple of quick questions just to make sure we're looking at the best product for you guys. It's not a one-size-fits-all scenario. It's really unique to your situation. So Harold, if something were to happen to you tomorrow, from an income perspective only, how much income is Elena going to lose that she's counting on from you? What are you taking home every month?
You mean my net income?
Yeah, your take home. Mm-hmm.
Take home, $3,000 a month.
Okay.
About, give or take.
And Elena, are you working?
No.
Okay. So no income at all then.
Right.
Okay. Do you have the ability to do, do you have a degree to fall back on, or is there something that you would do if God forbid something did happen to Harold?
I mean, I have a degree that I was working on, but I never finished it.
Okay. So it would be an emergency situation. If something happened tomorrow, you would have no income whatsoever. Do you have family? Do you have anybody that would step in and, take you and the kids in, or friends, or anybody like that you have in the back of your mind that you're thinking of?
I mean, probably friends, but
Okay.
I don't really want to have to rely on other people.
Okay. So you don't want to have to be a burden, and you want to make sure you've got your own stability there. Okay. All right. So together, you're making about $3,000 a month. I'm assuming that you're in pretty good shape because you just qualified, right? So, or do you have a lot of credit card debt or any big card payments, anything like that we're working on?
Just some credit card payments, and we have one car.
Okay. So minimal credit card debt, nothing too crazy where you're working on like $1,000 a month.
It's about $500 or $600 a month.
Okay.
I think a payment on the credit card.
Okay.
Cards.
Gotcha. Okay. So I think it seems like we're all on the same page here that if God forbid something happens to Harold, we need to make sure that Elena is squared away. Likewise, if we can, if there's room in the budget, if I have to pick, I'm going to go where the need is the greatest. Okay. So right now, I'm really concerned that if something happens to you, your wife and kids have nothing. So that's going to be my priority today. If we can find some room in the budget, we can add something in for Elena, even if it's $50,000, something that'll help you out.
But I do have coverage at work.
Okay, we'll get into that here in a sec. But just for the mortgage protection standpoint, that makes sense? Okay. So I've got your mortgage here. It looks like it's at $175. And what's the monthly payment on that?
$850.
Okay. And I'm guessing you did a 30-year on that.
Yeah.
if you were to sell the home tomorrow, was there extra equity when you purchased the home? Did it appraise higher than what you guys bought it
A
for?
little bit, it appraised at like 179.
Okay, so I'm just gonna say right now, we don't have any equity. That means if you had to sell the home, you're not gonna really make anything on it at this point. Are you guys both on the loan, or is it just Harold on the loan?
It's just me.
Okay,
I'm on the loan and title, but Elena's not.
okay. So Harold's on the loan. Elena, you're not on the title to the property?
No.
Okay. So this is really important. If you're not on the, at least on the title to the property, and something happens to Harold, the lender can foreclose and take the property. You don't even have the rights to sell the home if you're not at least on the title. So your homework this week, this is really important, is you need to make sure that you get Elena added to the title. Okay, so you go to your local title company that closed you, or the attorney, or whoever that was, and you ask them to do a quick claim deed to add you onto the title. Okay, so can I get your agreement that you guys will at least do that this week or work on
Can you
that?
write that down, honey?
Okay,
Yeah, for sure.
all right. And then, it makes what we're doing here today even that much more important, because again, if you don't have the amount to pay off the loan, Elena may not be able to keep the home. If there's equity at the time of death, the lender may say they want the equity and they're going to foreclose and they don't care. So just want to make sure that you guys are aware of how that process works, because a lot of people don't really quite understand it. But are you guys clear on that? Or you have any questions on it?
I think so.
Okay.
Clear.
All right. Are you planning to do anything to pay off the mortgage a little early, or are you putting a little bit extra down on the principal?
Well, I was thinking about adding maybe $150
Okay.
a year.
Oh, a year.
Yeah,
Okay.
extra to it.
Okay. All right. And I only mention that because sometimes if we've got a little bit that we're putting down each month on the lender, we want to go ahead and instead of giving it all to the lender because your interest rate is so low, I'm guessing it's like 3%.
3.25.
Okay. We don't want to basically give them free money to invest, right? We could take that same money, we could actually get you the coverage that you need, for that worst case scenario death benefit, but then at the end, maybe give you the money back so that you can either prepay your mortgage early, or you can just use it in retirement. Is that something that sounds like it might be a good concept to consider?
I guess
Makes
we'll
sense
see.
for you? Okay. Are you both, or we're focusing on Harold, but, and hopefully we'll have some room for Elena, but are you both fairly healthy, taking any medications?
I don't take, well, I do take a medication for diabetes.
Okay.
For, pre-diabetes.
Okay. Metformin, Janumet, Januvia. Okay. Anything for blood pressure? I know sometimes they give you like lisinopril or something to counteract that. Okay.
No.
Any history of heart attack, stroke, cancer, any hospitalizations in the last 5 years that you might be forgetting about?
I've had a few surgeries.
Okay.
But nothing.
For
Damaged tendons, knees.
Okay.
Achilles, shoulder.
any narcotics in the last year for pain that they would have prescribed related to those
I
injuries?
did take pain meds for after my knee surgery about a year and a half ago,
Okay.
but it was only for
Okay.
a little bit.
And nothing within the last year?
No.
Okay. Anything, and I have to ask because a lot of people forget when I ask them if they're healthy, anything for like anxiety, depression, PTSD, anything like that?
I do have PTSD, but I don't take any meds for it.
Were you ever prescribed medications that you're not taking?
The VA prescribed me meds.
That's it. Okay. Do you remember what they prescribed and about how long ago that
It was about 5 years ago, and I
Okay.
don't remember
Okay.
what it was. I took them once.
Okay. Took them once and
Yeah.
just didn't work out.
Yeah.
Okay. And Elena, anything for you?
No.
Okay.
She's the picture of perfect health.
Yeah,
That's
true.
awesome. Best time to acquire the coverage is when you're in that shape. Anything that you guys have at work? Any work
I've
coverage at all?
I've got 50,000 at work.
Okay, and I know Elena, you don't work, but do you have some work for Elena at work at your workplace for her?
At work, no.
Yeah. No. Okay. And you said 50,000 for you?
50,000.
Okay. So I'm not really going to factor that in today. It looks like you've got about, a year and a half worth of income replacement. If you ever leave your job, if you become disabled, anything like that happens, you're going to lose this coverage. So we don't want to count on it. It is good, though, in your scenario that you've got that little bit of extra to help for the income replacement. But do you have anything that you actually own? Any straight life insurance outside of your job?
No, I thought work was enough.
Okay. The nice thing about what we're going to look at today is that it will add that additional coverage that you really do need, not only for the extra income replacement, but also for the mortgage protection. Anything that you have, are you guys contributing to like a retirement fund right now, 401, anything like that, or any old money in the market, like from a previous employer?
I do have money that I put into the 401k at work now.
Okay.
But I also have one from an old job too. It's only about 30 or 40,000.
Okay. All right. Well, we can't do anything to help you with the current 401. What I can say about that, though, is that a lot of people are starting to reallocate some of those funds that they're putting into their 401 into things like the return of premium products that we're going to talk about. So just kind of have that in the back of your mind when we get into the pricing here in the next couple of minutes. But as far as the old one that you have, so you've left that employer, correct?
Yeah,
Okay.
no longer there.
Okay. And do you have that with an advisor, or is it just kind of sitting out there in the market?
It's just sitting out there with the old company.
Okay.
Doing much of nothing.
All right. And you said it was how much?
30 to 40,000.
Okay. So, excuse me. This might be a pool of money that we do want to hone in on. There's usually a way that we can help you reallocate this money to actually increase your legacy a little bit without costing you maybe the full mortgage protection premium. So I do want to show you an illustration. There's a vehicle, and I'm guessing this would make sense to you, but we could actually take this full amount and we could make sure that you never lose any money in the market. We could increase that legacy for you immediately. In our case, it's about 12%, 8 to 12%. And you can actually grow pretty significantly. Right now we're seeing close to 6 and 8% returns. Is that something that would make sense to take a look at while I'm here?
Well, yeah, we'll see what the mortgage protection product is first.
Sure, and that's totally separate. I just want to make sure that I present all the options to you, and if we want to spend a little time at the end, we'll go ahead and do that. So, does that make sense?
What do you think, honey?
That's a great idea.
Okay. All right. Okay. And Elena, do you have anything, when you, in the past from other jobs, I know you're not working right now, but anything that you might have had out there?
No.
Okay. Okay. So before I go ahead and get into the pricing, I just want to explain how we work, okay? Everything that we do is called non-medical, okay? We don't ever want to, we have the ability to, but we don't ever really want to put you through what we call a fully underwritten portfolio. That means somebody comes in and they draw blood, urine, they pull all your medical records. The reason we don't want to do that is because if there's something that you don't know about, like let's say your cholesterol is a little bit elevated or your A1C is up or the blood sugars come in a little bit wacky, that goes on your permanent medical information bureau. And then we can't go backwards and do the non-medical portfolio. Does that make sense? So today what I'm going to show you is only non-medical. We have the ability to go fully underwritten, but we're choosing not to because you've got diabetes. Okay? And it's a risk for you.
So how does the non-medical work?
So essentially we ask questions on the application, and based on what you're telling me, all of the questions that apply to you, you're going to be fine. We do a prescription check. Doesn't cost you anything. They just do a quick check to verify the medications that you're taking. So for instance, if they see this old PTSD medication, that's why we ask about it. We just want to make sure we document that in the past you might have taken something and maybe you don't remember what it is. So when the underwriter asks us, we have an answer for that. And then they'll look at that medical information bureau. So let's say you've got cancer and you're not telling me in the moment that you have cancer and the doctor coded that you have cancer, the insurance company will find that. So if there's anything you're not telling me, it would be nice, now's the time to tell us before we get into the application process. Does that make sense?
Yeah.
Okay. So I'm going to take a couple minutes. I'm just going to price out the best option for you guys. So if you need to get up, use the restroom, anything like that, just bear with me. And then we'll go ahead and go over them, okay? And at this point, I'm going to go ahead and price out, obviously, what I think is the best scenario. For this couple, I'm going to be able to qualify them for really any of our term mortgage protection products, either Americo HMS or MU Term Express with the return of premium. So I break down a few different options. Who does the budget in the house?
She does.
You do the budget, okay. It's how it is in my house too, so. All right, so you can see here I've written down a few different options, and just keep in mind we can mix and match, okay? Our goal is to take as much as we can, but we also want to make sure it's within a comfortable budget for you. So in this case, we've got the full mortgage, the $175,000. The monthly premium is $110. At the end of that 25-year term, and I picked 25 years because you're 46 years old, and we time when we want to get that money back. You'll be heading into that retirement period, so that little lump sum will be good to help you prepay the mortgage if you want to, or just put it into a retirement vehicle. The lump sum at the end of that period is $68,000. Then this option gives you 3/4 of the mortgage, and this premium is $95 a month. At the end, you're getting back $58,000. And then if we look at half the mortgage, your monthly premium is about $65 a month. At the end, you're still getting back close to $40,000. The other option I wanted to present as well was a couple years of payment protection. Okay, at the least, we want to make sure that you've got time if you need to sell that home. If at that point there's $100,000 of equity, that it goes to your family and not back to the lender. So in that case, you could just do a couple years. You could do $25,000 for $30 a month, and you're still going to get all that money back. And then Elena, I just priced out a couple of lower options. So $50,000 would be $42 a month, still getting all that money back. And then if we looked at $25,000 for Elena, it would only be $27 a month. But again, getting every penny of premium back tax-free. So what I'm looking for today is a no-brainer number. Okay, if you guys combined a monthly premium, is there a number, even if you don't see it on here, that is going to be super comfortable, given what we talked about up here?
Well, can we hold on to this and think about it? Because we just refinanced, and I want to make sure about our budget.
Yeah, and usually what I'd like to ask you, because whenever I have somebody say, "Can I think about it?" there's usually a few different things we're thinking on. Is it the concept? I mean, I think we've established up here that you need this coverage. If something happens to you tomorrow, your wife and kids have $50,000 to live the rest of their lives with.
Well, you don't think your parents will take you in with the kids?
I mean, they probably would, but I just don't want to rely on that.
So is that a burden that you, I know I'm here because you want to protect your family because you mailed the form in. I can tell by the way you talk about them that you want to make sure they're okay. I don't think that that's the way you'd want to be remembered if something happened to you, that you put that responsibility on somebody else's family. Do you think that's a fair question to ask your wife? I mean, Elena, in all honesty, you're going to be the one here, in all honesty. So now's your time to kind of speak up. The numbers are here. It's obvious. If something happens to Harold tomorrow, is $50,000 in the moment enough?
No.
Okay. So what we don't want to do is risk your insurability. We can always play with the numbers. So I'll ask you again, is there a number, do you see a number here, even if we're just focusing on you?
What do you mean by risk my insurability?
So we don't want to leave here tonight with no coverage in place, and then you either have a car accident when I leave, or God forbid something happens, they add a couple more medications for your diabetes, and then we can't get you the coverage. So what we're able to do is, number one, get the application and get it approved. Make sure we get it approved. Then we've got a 30-day period to fine-tune your budget. But if the concept doesn't make sense to you,
how long does it take to get it approved?
Usually it's an instant approval. In your case, it will go in-house because of the diabetes medication. But usually within about 2 to 3 days, we'll have a final approval.
And what's the company name?
The company is called Americo. They're one of the largest privately held insurance companies in the nation. And the reason I go right to Americo, there's a couple of reasons. One is they are the most cost-effective in their market for the return of premium product. The other reason is I've been through the death claim process with them. This is really important because all of our companies are A-rated, so you really can't go wrong with any of them. Mutual of Omaha, CFG, Foresters, Global Atlantic, Transamerica. Americo My sister recently was killed, you know, a couple months ago, and they paid her death claim in 3 days. So that's why I go right to America.
I don't know, what do you think, honey?
I think that sounds like a good option.
Well, you do the budget, which do you think?
So do you think is the higher option, is the full mortgage feasible? Because if you can do that, obviously it's going to give you the full mortgage and you're still not going to be set for life. It's just going to be a Band-Aid on the situation. Or does this middle option, that 3/4 mortgage, feel a little bit more doable in light of what you guys have going on with the kids and the rest of the credit cards you're paying off?
I think the middle option's the better one.
Okay. What are your thoughts, Harold, about at this point adding Elena? If something were to happen to Elena, would you be able to continue working, having the 3 kids? I mean, I know for me, it was my sister that passed away, but I couldn't, I'm still not quite at full capacity. I couldn't go to work for over a month. Do you think you would need some support if something, God forbid, happened to her to help you with the kids?
Well, I think her parents would step in to help.
Okay. So do you feel at this point,
Or
okay,
something like that.
okay. So do you feel at this point that maybe we should focus just in on you and kind of allocating as much of that budget towards your coverage as we can and kind of leave Elena out of it for now?
For now.
Okay.
Well, if we get coverage on her, what happens if I run her over in the driveway?
Well, now I'm a witness, so if that really does happen,
Okay.
it would be an accidental death. So there is some accidental coverage. You know, in this case, I gave you the extra 25% in accidental death. So that could give you a little bit more in that situation.
Well, let's focus today on
Okay.
me.
Okay, so I would say let's go ahead there. Let's start there. What I'm going to need from you is your driver's license. I'll need the medication bottles, unless you know the exact dosage and spelling. Some people do, but it's always good for me to take a look at those. And then we do need to collect routing account information. We get it all in the system, and like I said, within a couple, 2-3 days, we should have a full approval, or I'll know if we have any issues at that point.
Can we not give you that information after?
No, unfortunately, for an insurance company to even process an application, you have to provide all that information. So is there a reason why you wouldn't be comfortable providing the routing account information? Our goal is to make sure that if, God forbid, something happens, the policy is going to pay out. So when we give them permission and we give them the routing account information, what that means is if I leave here tonight and you died in an accident in 2 days and the policy was going to be approved, that death benefit will pay out as long as they can draft that first premium.
Okay.
So we're essentially taking all the risk away in this moment. Does that make sense?
Yeah.
Elaine knows all that stuff by
Okay.
heart.
Yeah.
Okay. So does that make sense? So
Yeah.
that's what we're doing here today. We want to make sure that you're covered. Okay.
Makes sense.
Okay. So I'm going to go ahead and start the process. I'll wait on you to get those things, and that's essentially it. So I'm pulling open my computer and I'm getting to work. I'm not really going to talk about anything else at that point. I do want to go back though, guys, and talk, you know, after I do the application, if you can, while I'm getting all this together, do you have a statement or anything on that 30,000 that we talked about earlier on?
No.
Is it with Fidelity, did you say, or a
Do
different
you have a
company? Or?
statement in the kitchen where you keep all your paperwork?
Yeah, why don't you see if you can find it? And I'm going to go ahead and I'll get started on the application, okay? And then essentially from there, like I said earlier in the other training, I do a lot of my illustrations on the spot for the annuities. I don't recommend that, obviously, when you're newer. So you're just going to go ahead and ask them to make a copy of the statement and take it with you. And then I'm going to go ahead, if it's okay, I'm going to go ahead and take that statement and we're going to have our financial department go ahead and draw up the illustration for you guys. And if I could, I'd like to reconvene, we're at Tuesday, I'd like to reconvene on Friday. When are you guys both home on Friday so we can bring it back by?
I'm home all day.
Okay.
Friday's my early day. I'm usually home
Okay.
about 5 or 6.
Okay, so we'll come back. Let's say I can probably get here about 6:30 on Friday. So I'll have everything needed there, and we'll go over that option as well, because that, if we can make that happen, that's going to add a little bit extra to your portfolio. Not a huge amount, but we might as well get get it somewhere where you can watch it grow and have a little bit of a bump to what you've got going on now. And that's essentially it. As I wrap up, when I'm done doing the application, in this case, Harold, it did go in-house underwriting as we anticipated. That's no problem. On the plus side, we did not get an auto decline, so that's always ideal. We want to make sure that we eliminate that issue, so we're good there. I'm going to let you know the minute I have an approval. Who do you want me to contact? Is it best?
Me.
Okay.
Fine.
Are you comfortable with text? Do you prefer email? You want me to call
You
you?
can text me. When
Text you.
will the first payment get taken out?
So once it's approved, you're going to hear from me. I'm going to let you know it's 100% approved, and usually within about 48 hours, the carrier will drop that first premium. Sometimes it even takes another couple days for you to see that come out of your bank account. So at this point, we're probably about 4 or 5 days, 6 days out before you even see it. But you're going to hear from me, so don't worry about all the details. I'm going to go ahead. I've got my business card here on the back. I'm going to go ahead and write down what we're doing. I've got the company name. I've got the draft date is basically the approval date. So if it gets approved on October 20th, they're going to go ahead and draft that premium. You'll probably see it come out on the 22nd, 23rd. Then next month, it'll come out about the same day. If you need to change that moving forward, just give me a ring and we'll help you with that. Okay. And then I've got the coverage amount written down, and it's the 25-year term, and the return of premium is the $28,000 in this case. And at the top, I've also written down your policy number, okay? Guys, I have a business card that I have all this information on the back of the business card. So I don't know if you've got something like that, or if you can create something like that, or we can maybe help you with that. I leave this with the client. But on the back, I'm also going to write down the policy number at the top. So if God forbid something happened to me and you couldn't get a hold of me, you can call Americo directly. I've given you a brochure of the product as well, and you can reference that policy number. Okay.
I have a question. Ms.
Sure.
Linda.
Mm-hmm.
The money that we get back if I outlive the policy, do I have to pay tax on that?
It's tax-free.
That's pretty good.
Yeah,
I'll
that's
take you on a
awesome.
nice vacation.
Great, I can't wait.
Any other questions for me, guys? If everything makes sense, you feel comfortable with what we're doing here today. I feel better for you. I hope that you do as well. Any other questions before I leave you guys?
No. You know,
Okay.
No.
All right. Well, I'll be in touch in the next few days, and we'll go from there.